Hello, we are back. Next up, we will be hearing from Rob Towner, Managing Director of oil producer and explorer, Triangle Energy. Thanks, Rob.
Thanks, Amy, and welcome everyone to another Noosa mining virtual conference, or the first one. We've participated in all of the Noosa conferences to date and thoroughly enjoy them. It's a pity we can't all catch up and have some general discussion around the booths. However, let's hope for November. So to begin, Triangle Energy listed obviously on the Australian Stock Exchange. We have had an interest and operated the Cliffhead oil field now since 2016. In my cover slide, you'll see the infrastructure that we acquired as part of this oil field, which is the offshore platform, Cliffhead Alpha, up in the top left. And in the middle, you'll see that we have the Arrowsmith processing facility, which is where the fluids are pumped from offshore to onshore, and we separate the oil and water. That has capacity significantly above what the field is currently producing. The platform is an unmanned platform, being relatively close to land, so we don't have any people staying on the facility at any point in time over a day. It's always during the day that we do maintenance trips to the facility. The company's corporate overview. We have 360 million shares on issue. There are 72 million short-dated options expiring in November this year. Current share price of 3.3 cents gives us a market capitalisation of 12 million. At the last reporting quarterly period, we had 4.17 million in the bank. We have an intercompany loan within the Cliffhead ownership structure of $870,000. We have a significant investment as the major shareholder of listed company on the ASX, State Gas Limited, which has a value to the company of 20 million, which, as you could quickly work out, is more than our current market capitalisation. We have also listed there our last 4 quarterly production levels, and with the variations in oil prices on those barrels produced per day, that generates us monthly income that we operate the field with. Our board's currently 4 people, myself as Managing Director and 3 non-executive directors, including Chairman Tim Monckton, who is in the financial markets. Malcolm King has been 30 years in the oil and gas sector with Shell, more recently Cenex in Brisbane, and Wei Lin Wong has a 30-year career in the oil and gas sector in operations as well through Southeast Asia. The Cliffhead project has been producing now for approximately 15 years. It's situated 270 kilometres north of Perth, within production licence WA31L, and within that is the Cliffhead oil field. It sits within 15 to 20 metres of water, and the onshore Arrowsmith stabilisation facility can produce up to 15,000 barrels of oil a day. There are 5 producing wells, and we've recently invested $4.4 million in capital expenditure towards the maintenance of the infrastructure since July last year, and have recently confirmed new contingent resources within the field that will enhance the life of the infrastructure. There's 3 priority drilling targets within that, and they can all be drilled either from a rig coming onto site, but it is our belief that it certainly can and will be most likely drilled utilising the platform that we have. As I mentioned, we are an oil producer. We're probably one of the smaller ASX producers. We are unique in that we are the only offshore producer in the Perth Basin, and there has been limited exploration and development within the Perth offshore basin in the last 10 years. That's where we saw the opportunity to purchase into Cliffhead back in 2015-16, when we last saw the oil prices at similar levels to now. The production of Brent crude and the price we received from Brent since January this year There was new compliance with low sulphur requirements for shipping out of Australia, which was set by the Australian Maritime Safety Authority. As a result, from January, we received a small premium of $2.80 US on our produced crude. The Cliffhead oil field, one of the things I certainly believe, and that's why we purchased into it, is that this is a field that had more life. It has produced for some time, and with revenue, despite highs and lows of commodity prices, it's a lot easier to run this sort of business with revenue and maintain, firstly, your routine costs, but secondly, manage the timing of your non-routine investment. Before the current oil price drop, we'd managed to reduce our routine lifting costs to $27 a barrel, which were previously we bought in around $40 US a barrel. As a result of COVID and the recent downturn in oil prices, we've managed to get our routine costs down to $15 through negotiation with our suppliers. Yes, there will be non-routine work that would be deferred, but obviously that's what we have the ability to do. And obviously with increased oil prices, that would make that more appropriate. And most forecasting is saying that over the next 12 months to 3 years, we're likely to see prices more around the level of $55. That cost management, given the size of our business, while we're small, we have production and revenues, we have a very a great ability to act quickly on both, the current situation and adapt to an upward change. Our main suppliers, be it our office, marine services with our boat, and air services transport, the trucking of crude from the Cliffhead Arrowsmith facilities to Kwinana south of Perth. And we have the ongoing parts and supply contracts. With a very quick reaction, we managed to reduce all of those contracts in the short term to allow us to get through what was certainly at the time uncertainty with COVID and oil prices. And as I mentioned earlier, the low for Brent oil during this was $25. We're now looking at, it's today $43 US, and over the last 12 months it's been 67. So as COVID slowly changes, whilst it's looking a bit uncertain again at the moment, I think the general consensus would be that over time the economies will go back to normal, and hence you'd expect that the oil prices would certainly stabilise at the current levels, if not higher. The Arrowsmith processing facility is the largest, and if not really there's one other smaller one, but this certainly has capacity to treat 15,000 barrels of oil a day. There are some new wells going in the last quarter of this year. Certainly if there was success in any new oil discoveries, we would be capable to produce that under contract. It was built, the whole facility onshore and offshore was built for $327 million and commissioned in 2006. We do have a requirement at the end of the field life to find another way to use that. Our first priority is obviously to find more oil, which I'll go to in the next couple of slides. This is a map of our various projects within the Perth Basin. You'll see in the red, which has certainly brought a lot more attention to the Perth Basin, the Waitsia West Erregulla discoveries in the red onshore. We have a joint venture with Key Petroleum for the Mount Horner project in the north there, which is L7. A 50% equity holder and farm out agreement's been completed. We also have TP15, which was a project that we farmed into in 2017 by drilling a new well. That well was an oil discovery. We saw a great response in terms of our valuation on the back of it. We've subsequently completed 2D seismic. It's not enough commercial oil in where we drilled, but there is certainly reason, and the joint ventures are planning towards doing an extension of seismic in the offshore area. And then the Cliffhead producing assets there in the middle offshore. We've got 2P reserves of 1.7 million barrels as of June 19. We've completed the Cliffhead Renewal Project's first stage, which has identified new oil, and we look to do more seismic next year. Excuse me. So the Cliffhead Renewal Project is really what we believe is running an oil field is all about. We know the Cliffhead wells that are there now, there's 5 producing wells, 3 water injection wells. There's been no other work other than the Mentel 1 well, which has been drilled in the last 10 years, but there's been no further interpretation of data, seismic. So we've spent the last 12 months reinterpreting the available data and identified that we've got new remaining undrilled satellite features that would potentially deliver between 1 and 7.2 million barrels of oil. The blue dots on the map are our existing wells, both the production and water injection wells. And you'll see up to the northeast, Mentel 1, which is the one that we can see. It'll be an appraisal well, but more closer is Southeast Nose and West High. They are more likely to be production wells. And if you consider we have the 1.7 million barrels currently, plus another 2, that would certainly be quick to market, or given that we have the platform and infrastructure, that means that the return on that investment to drill them would be relatively quick. And as I said, give some more life to our current 4 years of production. So that's just the resource summary, which I've summarised already, but obviously if people would like to look at that in more detail, they can later through downloading that, the presentation. So with the focus I've put on the infrastructure, it's obviously important that we have a presence in the other opportunities in the Perth Basin. That was our first investment with Xanadu and TP15. As a result of the drilling and the seismic program that was completed late last year, I mean, I think the joint venture's now invested over $10 million into this project. What it has highlighted is, yes, there is more oil. We believe there's probably 1 million barrels in Xanadu 1 in that structure, but the seismic has identified, again, 2 large structures not far to the west and southwest of there. So the plan would now be to start preparing some more seismic on those licenses. Just to give you a scope of the distances, Xanadu 1 is right on the beach. It was actually a well that was drilled from the coast offshore horizontally, and the distance from Xanadu 1 up to Arrowsmith up here is 12 kilometres, which is the same as Cliffhead offshore. So logic would say that, you know, you could pipe fluids to Arrowsmith. The Mount Horner production licence, again, this has been a field that's been in production. It was closed in during the 2014-15 oil price decline. The work that's been done by the operator Key Petroleum has identified other opportunities through seismic and reprocessing of historical data. We'd be looking to implement a seismic campaign, which would then identify some new drilling targets onshore. State Gas Limited. We floated State Gas in 2017. It was a gas project in the Southwest Bowen Basin. That Triangle had the operatorship and a 60% interest. It was this decision at the time that this would be better operated out of Brisbane. We partnered with a finance group in Brisbane to float the company, and we did that successfully in 2017. Since then, we've completed at State Gas 2 drilling programs. Richard Cotty, the Executive Chairman, did present yesterday to the Noosa virtual conference. We've now got 2 wells on production testing and are focusing to have production in 2022. The holding of our 32.7% is currently worth approximately $20 million. So in closing, I think we've certainly had a very busy 3 or 4 years. I mean, the oil sector has certainly not been easy for junior companies on the ASX. And I think we've demonstrated we're not sitting on our hands. We have to invest money in this industry to get an outcome. And we look forward to the next couple of years with State Gas and our Cliff Head Renewal Project and some drilling, hopefully all going to plan by the end of next year. So thank you for your attendance.
Thank you so much for that, Rob. A wonderful presentation. If you'd like to know more about Triangle Energy, head to noosaminingvirtual.com.au, go to the Triangle Energy company description and click on the contact links. Not long before we're back with our next presentation. See you then.